Some companies are powerful because everyone knows them. Apple sells the phone in your hand. Amazon delivers to your door. Google shapes how you search. Microsoft powers the software behind millions of businesses. But some companies are powerful in a quieter way. They do not sell you a product. They do not need your attention. They operate in the background, connected to the money that moves through the global economy. One of those companies is BlackRock. BlackRock is the largest asset manager in the world. It manages trillions of dollars across stocks, bonds, ETFs, pension funds, institutions, governments, and private markets. But its power is not just about how much money it manages. Its power comes from where it sits, between savers and markets, between pension funds and corporations, between governments and infrastructure, between risk and capital. BlackRock was founded in 1988 by Larry Fink and 7 partners. At the beginning, it was not trying to become one of the most important financial institutions on Earth. It started as a fixed-income investment firm focused on bonds and risk management. That detail matters, because BlackRock was built around one question: what could go wrong? Larry Fink had worked in mortgage-backed securities earlier in his career. After suffering a major loss, he became focused on understanding hidden risk. Markets can rise, markets can crash, interest rates can move, currencies can shift, governments can default, companies can fail, and portfolios that look safe can suddenly become dangerous. BlackRock grew by helping investors understand those risks before they became disasters. That obsession led to one of its most important creations: Aladdin. Aladdin is BlackRock's investment and risk management platform. It helps major institutions analyze portfolios, track exposure, and model how investments could behave under different market conditions. This made BlackRock more than just an investment firm. It became part of the infrastructure of finance. Banks, pension funds, insurers, governments, and asset managers needed systems to understand increasingly complex markets. BlackRock offered investment products, but it also offered the machinery to manage them. Then came the shift that changed everything: passive investing. For decades, investment firms tried to beat the market by picking winning stocks. But investors began asking a simple question: why pay high fees if many active managers fail to outperform over time? So money moved into index funds and ETFs. Instead of trying to beat the market, these funds simply tracked it. They were cheaper, simpler, and easier to scale. BlackRock became one of the biggest winners of this shift through iShares, its ETF platform. This is where BlackRock's influence became hard to ignore. When people save for retirement, they usually do not pick individual stocks. Their money flows into pension funds, retirement accounts, investment platforms, and ETFs. Those funds may track major indexes, and many of those funds may be managed by BlackRock. So when people say BlackRock is behind everything, this is what they usually mean. BlackRock often appears as one of the largest shareholders in major global companies. But that does not mean BlackRock owns everything with its own money. Most of the time, it is managing money on behalf of clients, retirees, pension funds, governments, insurers, universities, ordinary investors. BlackRock is not a secret owner above the world. It is more like a giant pipeline. Money flows from savers into markets, and BlackRock helps organize, manage, and measure that flow. But scale creates influence. If you are one of the largest shareholders in thousands of companies, corporate boards pay attention. Executives notice how you vote. They notice what you say about governance, risk, executive pay, climate, and long-term strategy. This is why BlackRock became controversial. Some people say it has too much power over companies. Others say it is simply representing the interests of its clients. Some accuse it of pushing political agendas. Others accuse it of not doing enough. But the deeper truth is more structural. BlackRock became powerful because the world changed in its direction. Retirement savings became financialized, markets became indexed, risk became data-driven, capital became global, and finance became too complex for small institutions to manage alone. BlackRock grew because it offered scale, systems, products, and trust. It became useful, then it became essential. Now BlackRock is moving deeper into private markets, infrastructure, private credit, data, technology, and energy systems. That matters because the future will require enormous investment. Data centers, power grids, ports, roads, housing, water systems, clean energy, AI infrastructure. The institutions that help direct capital into these areas may influence what gets built, who funds it, and who benefits. That is why BlackRock matters. Not because it controls the world from a hidden room, but because it sits close to the center of the system that funds the world. BlackRock did not become the company behind everything overnight. It became that way by understanding how money moves, from workers into pensions, from pensions into funds, from funds into companies, from companies into infrastructure, and from infrastructure back into the economy. BlackRock built itself around managing that movement, quietly, systematically, at enormous scale. It does not own the world, but it helps manage the money that moves it, and in the modern economy, that may be one of the most powerful positions of all.